Welcome to Byte-Sized Tech, where we blend casual conversations with insightful discussions on the latest in technology and gadgets. Yeah, I was just thinking, with all the buzz around AI lately, it feels like we're on the verge of a massive tech shift. I saw something the other day about IBM CEO talking about a billion new apps popping up, a lot of them AI-powered. A billion! It's kind of mind-boggling to think about how that'll reshape things.
It certainly paints a picture of, well, rapid evolution, though maybe instead of a billion totally new apps, it's more like AI getting baked into everything we already use.
Oh, okay. More integration than just brand new stuff everywhere.
Yeah, I think so. AI becoming foundational, like the internet did. Less standalone, more
Okay.
embedded.
Okay, so today we're diving into some of the really interesting developments hitting the tech scene. And we've got some great stuff from recent Bloomberg technology reports to help us make sense of it all. We're going to look at DoorDash going global, IBM's take on this whole AI explosion, and what's happening with Palantir in the market. Think of it as your quick download of what matters.
Precisely. We're aiming to sort of extract the signal from the noise, giving you the key takeaways and exploring what they might signify for the tech landscape.
First up, DoorDash. They seem to have their sights set on taking their delivery game worldwide, and they're even looking to get you a table at a restaurant now.
Yeah, what's intriguing is DoorDash's very deliberate push into international markets. Strong focus on the UK, urban centers in Europe. Their financial position is strong, right? Built on that dominant US market share, like 2/3 of it.
Wow, 2/3?
Yeah, so that's providing the fuel for this expansion. They've got a model that works, or they think works, and they're betting they can replicate it. Now, Europe's different, obviously. Different competition, different customer habits.
Not just a copy-paste job.
Exactly. We'll have to see how they adapt that playbook.
And a pretty significant part of that playbook seems to be this $1.2 billion acquisition.
Yeah.
7 rooms.
Yeah, that's not pocket change.
Definitely not.
No, it's a substantial investment, and it points to a clever kind of dual-pronged strategy. For consumers, maybe eventually you book your table right in the DoorDash app. Seamless integration.
Okay, makes sense. A one-stop dining platform.
Right. But maybe even more strategic is the B2B side, what it offers restaurants. 7 rooms gives them tools for loyalty programs, managing customer relationships, reaching diners off the DoorDash platform, too.
Ah, so it makes DoorDash more indispensable to the restaurant itself beyond just delivery.
Exactly. It's about becoming a more essential partner, owning more of that whole dining journey.
Right. Not just the last mile. Now, looking at their recent earnings, seemed like analysts were a bit cautious, despite some positives.
That's the nuance, yeah. While there was optimism, like around Tokyo Order's outlook, the adjusted EBITDA forecast was somewhat conservative.
Adjusted EBITDA.
Yeah.
Remind us.
Basically a measure of operating profit before certain costs. So a conservative outlook there suggests, well, it likely reflects the big upfront investments DoorDash is making. International expansion, integrating 7 rooms, that costs money now.
Okay, so they're spending to grow. Analysts are watching if it pays off long term.
Exactly. How quickly does that investment turn into profit down the line?
Gotcha. Okay, let's switch gears. The AI elephant in the room, IBM. Their CEO is talking up potential. 1 billion new AI-powered apps in 3 years. That sounds huge.
It's certainly a bold forecast, highlights the sheer scale of AI adoption they expect. But what's particularly notable about IBM's strategy is the emphasis on enterprise clients using their own data.
Right, the proprietary data thing, not just generic models.
Exactly. That tackles the big concerns. Data security, relevance for specific business problems. It's a key differentiator.
And they've launched this Watson X Orchestrate thing with like 150 agents. What are those exactly? Digital helpers.
Sort of, yeah. Think of them as specialized AI tools for specific business tasks. Automating workflows, some from IBM, some from partners. Things like automating invoice processing, maybe streamlining customer support, analyzing internal data.
So making AI more practical, day to day.
Precisely. Less abstract, more integrated into operations. And I mean, their generative AI business is already at $6 billion and growing.
Wow. So it's gaining traction.
Clearly. And generative AI, the kind that creates new stuff, text, code, images.
But with all this money pouring into AI, are CEOs getting nervous? Like, are they actually seeing results yet? Is it paying off?
That's the big question right now, absolutely. The initial hype, the experimentation phase, that's kind of shifting. Now there's a real demand for tangible business value. CEOs want to see ROI,
Return on investment. Makes sense.
Yeah, and ideally pretty quickly, like 6 to 18 months. Plus, they're grappling with how to fit all this new AI stuff into their existing tech setup. It's complex.
So how is IBM trying to help companies deal with that complexity and actually get those returns?
Well, they're focusing on providing integrated AI platforms, helping scale up successful pilot projects across the whole company, and building out these hybrid cloud strategies so data and apps work smoothly across different environments.
So providing the infrastructure and the know-how.
Essentially, yeah. Trying to move AI from cool experiments to core business drivers.
Okay. Now, government contracts.
Mm-hmm.
Always a bit tricky, right? There was talk about potential cuts, reviews, this DOGE situation, IBM getting grilled.
Yeah, scrutiny of government tech spending is definitely a recurring theme, happens periodically. But IBM's view seems to be that their core contracts, the really essential stuff like VA claims processing, GSA expense management, DoD payroll, those are probably secure.
Because they're fundamental government function.
Right. Discretionary stuff, maybe things involving replacing labor, those might face more pressure. But IBM seems to think new opportunities, like in government modernization efforts, will probably offset any cuts.
Modernization like what?
Air traffic control was mentioned specifically. That sector clearly ripe for tech upgrades. Ah, okay. Which brings up a critical point, though. For something like air traffic control, the AI has to be, like, perfect, right? Accuracy is everything.
Absolutely, non-negotiable. You can't have significant error margins in safety-critical applications. The underlying data has to be incredibly reliable. It's different from, say, a customer service chatbot or an internal IT help desk.
Where maybe a little error is more acceptable, or at least less catastrophic.
Exactly. Historically, there's been some tolerance there. AI can bring big efficiency gains in those areas,
Right.
even if it's not 100% flawless. So IBM seems focused on those lower-risk, high-impact uses first.
Got it. Match the AI to the risk level of the task. And it's interesting, IBM is still innovating in areas you might think are older tech, like mainframes.
Indeed. Their latest mainframe can handle, get this, 450 billion AI inferences a day.
Well, yeah, especially for things like fraud detection, shows mainframes are still incredibly relevant in this data-heavy world. Plus, their big investments in quantum computing and that huge $150 billion commitment to U.S. operations. It all underlines their belief in AI, hybrid cloud, quantum, and the need for the U.S. to lead there.
Okay, one more company to touch on, Palantir. They raised their revenue forecast, which sounds good, but the stock dipped. What's the deal there?
Yeah, Palantir's situation is a good example of that dance between performance and market expectations. Their growth is strong. I mean, 39% year-over-year revenue growth, U.S. commercial up 71%.
That sounds amazing.
It is. And the remaining deal value is way up. But the market might have already priced in even more growth. The stock had a huge run up this year. Valuation is pretty high. So even good news wasn't quite good enough for the existing expectation.
The curse of high expectations. And there's this perception of it being a retail trade stock, but you said ownership is more balanced.
Yeah, it's actually pretty split, roughly 50-50 between retail investors and institutions, which suggests, a broader belief in their long-term potential, especially with AI booming. Think about OpenAI's private valuation or insurers like AIG expecting to double revenue using AI.
Right, the potential impact is massive.
Exactly. And Palantir's CEO argues that as the underlying AI models become more common, like commodities, the real value is in the implementation, getting AI to actually work in the real world, which is Palantir's whole pitch.
Europe seems like a big potential growth area for them.
Absolutely. The CEO basically said Europe needs to embrace AI to survive competitively, and they recently won a NATO contract, which is a pretty significant signal of government adoption over there.
So even if U.S. government spending tightens a bit,
their continued growth in that sector suggests their AI solutions for efficiency, better resource allocation, they're still finding traction. AI could actually help governments save money or use it better.
Interesting. Okay, so pulling back, looking at the bigger picture from all this,
Yeah.
what are the main tech market trends you're seeing?
Well, definitely a huge focus on practical AI application and monetization, getting value from it. There's still some nervousness about tech valuations generally, but maybe not panic about a deep U.S. recession, given the job market's resilience.
Okay.
We see confidence from IBM about government business, Palantir showing resilience there too. So spending continues, maybe just shifts. Interestingly, maybe a bit of a market preference for software plays like IBM, Palantir over hardware right now, looking towards 2025.
Software over hardware.
Possibly. And maybe some investment shifting towards Europe, even with volatility in names like ASML.
Right.
And lastly, while big tech can still borrow money easily, investors seem to prefer safer government bonds over corporate debt at the moment. We'll keep watching earnings, like AMD coming up, for more clues on AI demand strength.
Wow. Okay. That's a lot to process,
Yeah.
but super insightful. So, quick recap. DoorDash betting big on global growth and owning more of the dining experience. IBM pushing its enterprise AI vision, focused on real-world value and navigating government needs. And Palantir showing strong growth, but bumping against those high market expectations, all happening while AI just reshapes everything.
That sums it up pretty well. Each company gives us a different window into what's happening in tech right now.
So for you listening, which of these trends grabs your attention the most? Is it that global expansion race, or maybe the nitty-gritty of rolling out AI in businesses and government, or just navigating the wild ride of tech stocks? We'd love to hear what you think. It's all happening so fast, right? Keeping up is definitely a team sport.
Absolutely. Staying informed, thinking critically, more important than ever.
Well, thanks for tuning in to Byte-Sized Tech. If you enjoyed this little tech download, give us a like, maybe drop a comment with your thoughts, share it with anyone else who geeks out on this stuff, and definitely subscribe so you don't miss our next deep dive. Catch you next time.